Hi, and welcome to Global One Media. Today, I'm joined by Chris Thompson, the President and Director of Research at eResearch, a company that specializes in writing research reports about small and mid-cap companies, and has recently published a report about Canadian North Resources, or CNRI. Hello, Chris. Thank you for joining us today.
Great to be here.
So you have recently conducted a comprehensive analysis about CNRI as an investment opportunity. Could you walk us through your key findings?
Yes, yeah. CNRI is a very interesting company. It has some very positive attributes because it's a new company, but it's picking up a project that had a lot of work done on it already. We're talking about the Ferguson Lake Project, which is more than a couple 100,000 square kilometers in Canadian North, which is in Nunavut. It's a territory in Canada. It has a very rich deposit of both sort of battery metals as well as some PGM metals, which are the precious metals. And it has a very large existing resource, which is a good starting point, as well as some existing infrastructure, because the project was worked on by a previous company that spent over $100 million in drilling and building a camp on site. So it is a very, a unique example of a company that is new, but has an advanced project that is moving forward.
And what can you tell us about the risk profile of the company's projects?
Yeah, the risk profile, it's slightly de-risked because it has an existing resource itself. The risk for the company itself is that it is operating in more of a remote area. It is in the Canadian North, so it does have some severe winters and hot summers, but it does have some existing infrastructure already, including an airstrip. It's close by to ports that they can use to bring equipment in, so that's good. The risk for the company itself is moving it forward. Is the requirement to get to sort of either a PEA or a pre-feasibility study, raising funds for that, and then eventually the biggest risk is raising the funds to get the project into production.
All right. And how strong do you believe the company's growth prospects to be?
Yeah, this is, again, as I mentioned earlier, because it has an existing resource. And to give viewers an idea, you're talking about 455 million pounds of copper. You're talking about this is the indicated resource category, of course, and over 300 million pounds of nickel, as well as 1 million ounces of palladium. This is where you have a strong resource to build upon, and also the size of the project itself. Since it is a district, there's also the potential for upside as they do additional drilling on the project. So this is where I see sort of the growth profile to be, as well from a valuation standpoint. As the company moves along, it gets slightly de-risks, and you get it closer to actually getting an economic viable deposit, which they could bring into production.
And in addition to that de-risking factor, what other factors did you consider when you performed the valuation of CNRI?
Yeah, so when I looked at the valuation of CNRI, I have a couple of sort of formulas that I go through. What I do is when I look at the resource itself, is I only give a specific credit for indicated versus inferred mineralogy. Because that way I take only sort of 75% of the resource if it's indicated, and only 50% if it's inferred. And that way I can look at taking a more economical view of the actual resource itself. And then I only gave, from a valuation, I only gave a 5% credit to all those resources when I multiplied it by the pricing of each metal by 2025. So in fact, my valuation is only based on 5% of a reduced resource. And with that, it's still, the valuation is above where the stock is trading today.
All right. And any final words to investors?
I think when you're looking at this company, you have to sort of look at the fact that although it's new, it's coming with a project that's had over $100 million already spent on it, and has a substantial resource that it could grow as it moves to either a PEA or a pre-feasibility study to wrap some modern economics around the project. But because it is a polymetallic deposit, it has lots of different types of metals. If you believe sort of in the EV or the electric future of the world, and you're looking for both sort of battery base metals, and then also have that bonus with the palladium and the platinum that are also in the deposit, I think this is an interesting project that investors might want to take a look at and put on their watch list for the future.
Absolutely, especially that the EV market and adjacent markets are growing.
Yeah, right. and a lot of the politicians in North America want to have domestic supply for these types of metals. And this is, as I say, a fairly large deposit, close to both the Canadian and the U.S. markets, and would benefit from the switch over, to electric vehicles, and also the intensification of the electrical network, which needs a lot more copper.
That's excellent. Chris, thank you very much for the information and for your time today. We look forward to talking to you again about your most recent research reports.
Thank you very much.